Hello, my name is Sarah Wheeler, and I'm the head of the Anti-Money Laundering Division at the Cayman Islands Monetary Authority here in the Cayman Islands. And today I'd like to give you a short presentation about the recent national risk assessment conducted by the Cayman Islands government on terrorist financing and run through some of the principles of that risk assessment and also some red flag indicators that might be relevant to you and your customers. So over the course of this short presentation, I'll be covering a little bit about the background and overview to the terrorist financing risk assessment. I'll look then at some of the components of terrorist financing and how that may differ to other areas of illicit finance and financial crime that you might be more familiar with, such as money laundering, and then look specifically more at the risk assessment conducted by the Cayman Islands government, the methodology and approach, the areas looked at, and the data underpinning the findings. And then we'll look finally at next steps and how you as financial service providers might be able to use some of these findings to inform and enhance your own risk-based approach to managing financial crime risks for your business and for your clients and customers. So what is terrorist financing, and how does this differ to normal money laundering or other elements of illicit finance that you might be more familiar with? Well, whether individuals or organisations, terrorists need funds to commit acts of terror, and that's true of a lone wolf operating from a small bedroom somewhere in an estate in London to a very large sophisticated organisation which is substantially funded. And again, whether the small or the large type of terrorist activity, terrorists will regularly adapt how and where they raise and move funds. And they'll also use and move other assets in order to circumvent safeguards that jurisdictions have put in place to try and disrupt this kind of activity. So it's important that we look at terrorist financing separately and give it the attention it requires. Now again, a reaction that you may well have is, well, what's terrorist financing really got to do with me here in the Cayman Islands? And it's certainly true that as a jurisdiction, we are fortunate in the sense that there's no history of terrorist attack in the Cayman Islands. There's no intelligence or other source of information to suggest that terrorists are operating in the Cayman Islands. And there's no evidence that parts of the Cayman population would be sympathetic to terrorist causes or radical ideas. And finally, there's no foreign terrorist fighters of Cayman nationality who've gone abroad to fight for terrorist causes. No one have ever been identified. These were all conclusions made in the National Risk Assessment, and they may confirm your thoughts that this might not be an issue that is really prevalent in this jurisdiction. But it's not really just about what's happening here domestically, as I'll come on to explain. There are much broader reasons why we should be considering terrorist financing risk. It's to build awareness of all the terrorist financing risks facing the Cayman Islands, not just those of domestic routes to terrorism. And it's also to enhance all your preventative measures to reduce such risks. So as I said, this presentation was really driven by the National Risk Assessment of Terrorist Financing that was conducted by the Cayman governments early this year. And this was to address both the findings in the National Risk Assessment of 2015 and also the CFATF Mutual Evaluation Report issued in March 2019. Both suggested that we needed to look again at terrorist financing and ensure that our risks were up to date. And the Cayman Islands came to a conclusion that there is a medium risk of the Cayman Islands being misused for terrorist financing purposes. The medium rating represents an assessment of both inherent risk, meaning risks prior to the application of the numerous legislative, supervisory and enforcement mitigants and controls we have here in the Cayman Islands. So what's the legal framework, and why do you have an obligation to consider terrorist financing? Well, Recommendation 1 of FATF requires all countries, to identify and assess and understand their money laundering terrorist financing risk for the country. So there's a broad brush obligation at Recommendation 1 of that global standard setter, FATF's recommendations. But we also have specific reference to this in our local domestic legislation. So the Anti-Money Laundering Regulations 2020 revisions say at Regulation 8.2e, any person carrying out relevant financial business shall manage and mitigate the risks that have been identified by that country or by the relevant financial business. So both of these principles encompass terrorist financing. So what sources of information did the Cayman Islands government take into account when it was conducting research on this risk assessment? Well, there were numerous data sources which were all very informative. They're listed here on this slide, but to pick a few out that I think are quite interesting, we had statistics on cross-border flows of funds to and from the Cayman Islands for the year 2014 to 2018, and that's all very easily available by SWIFT and pretty transparent. We've also, of course, got our suspicious activity reports that have been filed at the Cayman Islands FRA, where Tier 1 or Tier 2 countries are involved, and I'll come on to explain what those terms mean. Again, you can go through the list, but we've also, of course, got intelligence on domestic and international investigations and prosecutions. And we had some interesting data from the risk assessments conducted by us here at the authority and on the banking and TCSP sectors, things about customer risk and inherent risks. We've also got private flight and cruise ship vessel logs coupled with cash declarations to understand the risks involved with movements of people and movements of cash. So lots and lots of interesting data, and of course the open source information that was derived on just generally on terrorism and terrorist financing involving the Cayman Islands. So now we understand the data that went into preparing this national risk assessment. Let's have a brief look at the components of terrorist financing and how that may be different to other types of illicit finance. So the key aspect of terrorist financing is understanding who your high-risk jurisdictions are. Those immediately will pose red flags when you're dealing with potential terrorist financing risk. Now, they might not be immediately obvious. Some of them will be, of course. You might have guessed that Iraq, Afghanistan, Yemen, Syria would be on your Tier 1 list for terrorist financing, but India and the Philippines may be more of a surprise. Equally on your Tier 2 countries, you've got some countries there, some of the African countries that you would immediately potentially think could be vulnerable to terrorist financing, but then some other ones such as Turkey and Thailand, which again might not intuitively feel at first glance high risk. So it's important to be aware of those countries on those lists and adapt your risk-based approach accordingly. So funds can be abused for terrorist financing purposes in three distinct ways. One is collection of funds. That's the simple collection of funds for the purpose of terrorist financing, and that's usually a domestic risk, and we'll come on to look at that. As I've alluded to earlier, domestic risks in the Cayman Islands are relatively low, and we are fortunate in that regard. But the second, of course, is movement of funds, and that's where we may see more vulnerability as a jurisdiction. The final one is use of funds, and again, this is where we may see services provided being misused in order to facilitate terrorist financing. So the Cayman Islands National Risk Assessment for Terrorist Financing concluded from the evidence it saw that there appeared to be no active terrorists in the Cayman Islands. There's no evidence of radicalisation in the Cayman Islands, and as such there is a low risk of the Cayman Islands being abused for funds collection. So that's all very good news for those of us that live here in the Cayman Islands, but it doesn't necessarily mean that there aren't some very important terrorist financing risks of which we should all be aware. The more pertinent area for us all to be aware of is when we're talking about movement of funds or provision of services in order to facilitate terrorist financing. There are three different typologies for how this may happen, and these are set out in the National Risk Assessment on Terrorist Financing, which you can refer to for more detail. But in a nutshell, the first typology is where the Cayman Islands is used as a transit country for terrorist funds through banks, other payment channels such as MSBs, or being physically moved through the Cayman Islands territory. The second typology is where regulated service providers knowingly or unknowingly facilitate the movement of funds for terrorist purposes, but without the funds potentially entering or moving through the Cayman Islands. For example, lawyers or TCSPs may be providing their services to customers that support foreign terrorism. And the third typology is where Cayman Islands legal entities could be abused for terrorist financing purposes. We're going to now look at those three typologies in a bit more detail and look at the assessment that was made in the National Risk Assessment as to the Cayman Islands' vulnerability to those three mechanisms for transferring illicit finance for the purpose of terrorist financing. So firstly, let's look at the Cayman Islands' vulnerability as a transit country. So this is where funds are intended to be used for terrorist purposes abroad, but they're sent via the Cayman Islands, either through banks or other payment channels, or even indeed physically move through the Cayman Islands territory. So in order to assess this risk, the following data was looked at. As I mentioned earlier, the SWIFT data from 2014 to 2018, which includes all the originating and receiving jurisdictions, the analysis of inflow-outflow data through MSBs collected by the authority, and cash declarations versus physical movements of persons. So that's where their data about shipping logs, etc., and aviation logs was so vital and important. And the data showed that, in fact, most of the outflows and inflows, the vast majority, went to jurisdictions that we would not describe as high risk. So the data showed that the US, UK, Canada and Brazil accounted for 90% of our outgoing funds, and the US, Brazil, UK and Mexico accounted for 72% of incoming funds. So when we actually broke that down and looked at which outgoing funds and incoming funds actually went to Tier 1 or Tier 2 jurisdictions, it was an incredibly small percentage, 0.05% of total outflows and 0.03% of inflows. So although the Cayman Islands in the National Risk Assessment did not necessarily demonstrate evidence of being at high risk to be vulnerable as a transit country for funds, there are still a number of red flag indicators that financial services providers, in particular banks and MSBs, should really be aware of. And these are somewhat different to some of the risks that might be associated with normal money laundering risks. For example, money laundering risk would also take into account transactions which are inconsistent with the account's normal activity, but terrorist financing can often be deliberately very small sums of money on a frequent basis, and they may be ordered in small amounts entirely to avoid triggering identification or reporting requirements. So changes in activity and unusual behaviour are really key to be able to monitor through your ongoing monitoring. Funds transfers that don't include information on the originator or the person on whose behalf the transaction is conducted, or multiple cash deposits and withdrawals with suspicious references, or multiple cash deposits in small amounts but then followed by an amount with a large wire transfer to another country, frequent domestic and international ATM activity. All of these signs may not be nefarious on their own, but together may give rise for suspicions of terrorist financing risk, particularly when there may be Tier 1 or Tier 2 countries involved with one part of the transaction. Equally, you may see people involved in currency transactions where they're sharing an address or a phone number, or the address is in a business location that doesn't seem to correspond to the stated occupation. So again, there's a lot of common sense here that it just doesn't look quite right, and there's unusual or frequent activity across a number of jurisdictions. This slide also continues a list of red flagging indicators. We mentioned multiple transactions in high-risk jurisdictions, also the use of multiple foreign bank accounts, where transactions don't seem to have a justifiable economic reason or take place through a business account with no logical business, multiple domestic business and personal accounts, transactions involving foreign currency exchanges. Again, where you see multiple transactions but then followed within a short time by higher funds transfers. And also where you may see use of credit instruments or other commercial financial transactions in higher risk locations. So that was by no means a definitive list of red flag indicators, but gives you a flavour of some of the activities that might trigger concern that wouldn't necessarily do so if you were looking at normal money laundering risks, particularly where they are low value, high frequency. Now, the National Risk Assessment also considered inherent risk data that was retrieved from the banks. So, first of all, let's look at customer risk. Now, this really echoes some of the findings on the transactions where we saw very low exposure, really, with Tier 1 and Tier 2 countries. Again, with customers, there weren't proportionately many customers at all from Tier 1 and Tier 2 countries. Indeed, Class A banks in the Cayman Islands have a total of 2,198 customers, 98% of whom are from India and the Philippines. There were only 2 banking customers from Tier 1 jurisdictions that were PEPs. One was from India and one was from Turkey. And this is reflected as well in the data on the Class B banks and also for beneficial ownership. So really very low numbers of exposures to Tier 1 or Tier 2 countries, with the majority being from India and the Philippines. Again, looking at the inherent data from banks on products, services and transactions, there weren't a great deal of high risk factors here. So prepaid cards is a favoured mechanism for transferring finance for the purposes of terrorism. There are no prepaid cards or virtual currencies as a means of payment in our jurisdiction. There were some transactions conducted for respondents in India and the Philippines and Turkey, but really limited to those 3 countries, and only to the value of about $100,000. From a distribution channel perspective, we didn't see any clients onboarded using online platforms or through third-party introducers in Tier 1 or Tier 2 high-risk jurisdictions. And from a structural perspective, one bank has a parent company in India, 4 in Thailand, and again, branches in India, Ghana, Thailand and Turkey, but again, not a great deal of exposure to Tier 1 or Tier 2 countries. So let's move on now to typology B that we described a few slides ago. So this is the vulnerability of the Cayman Islands in terms of the services it's provided. So the vulnerability of lawyers and TCSPs to knowingly or unknowingly providing services that would facilitate financing of terrorism. So the majority of legal entities serviced by Cayman Islands TCSPs are involved in investment, funds management, real estate, technology and telecommunications, or service holding for special purpose vehicles, and aviation and shipping. And our TCSPs indicated only 14 beneficial owners from Tier 1 and Tier 2 jurisdictions, all of which are also PEPs. So not an immediately striking exposure to high-risk jurisdictions for terrorist financing. However, it is important to note that between 2015 and 2018, 46 suspicious transaction reports were received by the Cayman Islands FIU relating to Tier 1 and Tier 2 countries, and the vast majority did involve TCSP services. And the National Risk Assessment cites the case study which we've set out here below, and this would be quite typical of the typologies where we do see suspicions raised involving a TCSP. So we had an African licensed bank where there was a holding company established in the Cayman Islands and serviced by a Cayman TCSP. The bank was alleged to be involved in financing of terrorism and investigated as such. The Cayman Islands holding company was struck off the company register, and the Cayman Islands TCSP ended its relationship with the company. So a quick halt and pause to look at Cayman Services red flag indicators. Again, some of these are quite common sense, and these would be red flag indicators under any circumstances, and others may be less intuitive. So obviously, if the beneficial owners of the accounts are not properly identified, there's false identification used, or just a refusal to provide information, that should automatically raise red flags. where you may have multiple variations of names, addresses, phone numbers, or additional identifiers provided, and again, occupation of the customer not commensurate with the type or level of activity. That is quite common in terrorist financing. Or the sudden settlement of debts or payments of debts by unrelated third parties. And of course, the use of false corporation or shell companies would be an automatic red flag. There are a few more here on this list which may be less obvious, such as the sudden conversion of financial assets to a virtual currency or an intermediary that allows for increased anonymity, or just any transaction that doesn't seem economically justified considering the account holder's business or profession. Of course, if law enforcement confirms that the parties to the transaction are linked to a law enforcement or national security investigation, or there are any other links to known terrorist activities or sanctioned lists or terrorist organisations, that would be obvious and clear red flag indicators. So let's now consider the third typology, where we're looking at the vulnerability of legal entities and arrangements. So very few terrorism-related cases have actually been identified domestically through Cayman companies, although the case study we just talked about a few slides ago did involve a Cayman company. However, intelligence and typologies from the FRA and others do suggest that there are potential typologies around the raising of funds by terrorist networks through legal entities, such as straw companies, and using virtual asset service providers, by either using crowdfunding techniques or online wallets controlled by straw companies or fiat of virtual currencies utilised in either forms by the recipients. And I just want to take a few moments to consider separately virtual asset service providers and the risks associated with them in particular. In this jurisdiction, we do have a large number of initial coin offerings. And although there is no evidence at the moment to suggest those are particularly risky, because there is an element of transparency around them in most cases, should those ICOs become more closed and less transparent, there would be a much larger risk of them being used as a vehicle for channeling funds. So just want to keep an eye on, a watching brief. So the National Risk Assessment on Terrorist Financing ultimately concluded that this jurisdiction has a low domestic risk, as discussed. The risks around collection of funds and homegrown terrorist activities has very fortunately been low in this jurisdiction. However, there is a medium cross-border risk for businesses and transactions, movements of funds, services, products and assets channeled through Cayman to fund terrorism abroad. And although as discussed, some of the exposure through simple funds transfers may be lower, because of the inherent risks associated with legal persons and arrangements and services provided, there is an overall medium risk for these to be vulnerable to the transfer of funds for the purpose of terrorist financing. And when the risk scoring was done, taking the low domestic assessment with the medium was weighted more heavily, and the overall risk is therefore medium. So what does the Terrorist Financing National Risk Assessment mean to you, and what are the next steps you can take to try and incorporate some of these findings into your own mitigation and management of financial crime risk? Well, all financial services providers should be aware of the findings and take effective action to mitigate those risk threats and vulnerabilities. You should consider how your AML CFT systems and controls and policies and procedures can be further strengthened to mitigate these risks. And you should, of course, consider these risks when you're conducting your own risk assessments and the ongoing monitoring points. And again, there's an important element to your training with this, that you can incorporate some of these typologies to further develop your staff's understanding of money laundering risk and terrorist financing risk. So thank you for listening to this presentation. We hope that some of the red flag indicators will be of help to you. If you have any further questions at all, please do not hesitate to get in touch. Our email address is here on the final page, contact amlcft@cema.ky.